Hello traders, welcome to the FTMO Academy. My name is Peter, and today and in upcoming videos, I will be providing you with necessary knowledge about Forex trading. Just to let you know, we have developed an educational series so that everyone who wants to start trading has a solid background about Forex and trading in general. So what are we going to start with in this chapter? This video is going to be about financial markets. What is it and who participates here is the first big topic. Do you know the world's biggest exchanges such as New York Stock Exchange or Euronext? We are going to cover a few of them. After the basics, we will talk about centralized and decentralized market and everything you need to know about them. At the end of this video, we are going to talk about Forex specifically. Financial market is a place that provides the ability to exchange different financial assets. Through this exchange, you can buy and sell a variety of different assets such as stocks, bonds, commodities, and agricultural products or currencies. The capital market is one of the main parts of the financial market. Now let's simply divide market participants into investors and issuers. Investors go to the market every day to use their or others' money to purchase stocks, bonds, or foreign currencies. Their sole purpose is to gain short or long-term return on investment. Every market or exchange works in the form of double-sided auction, where the final price of the traded instrument is decided by the supply and demand dynamics. Here is the list of some of the world's biggest exchanges. New York Stock Exchange is the largest exchange in the world measured by the value of the traded securities. Nasdaq is a stock exchange. In Europe, we have Euronext, FWB, or LSE. In Asia, there is Tokyo Stock Exchange, Hong Kong Stock Exchange, or Shanghai Stock Exchange. Simply put, there is a lot of them. All the above-mentioned institutions are so-called centralized exchanges and are characterized by the transaction settlements between buyers and sellers. It is a central place where the price is determined. Settlements of trades are called the clearing. The centralized exchanges are not physically or logically linked to one particular place. The market therefore operates on the basis of link between participants without any central authority. As you can see in the image, participants can be banks, ECN, or other brokers, retail traders, or trading platforms such as Reuters or EBS. So what is decentralization and what is decentralized market? Well, decentralization is a process of distributing the decision-making powers from central authorities. Decentralization is, by the way, one of the most attractive attributes about cryptocurrencies, as they cannot be controlled by any central entity. For example, in peer-to-peer systems, Bitcoin does not require any central authority for its transaction to be completed and verified. Unlike the centralized exchanges and exchange bureau, their decentralized sisters are just an interface that, simply put, just connects two participants who want to make a trade. Decentralized exchanges also include foreign exchange market. Talking about Forex, we use the term OTC, over the counter. OTC is a decentralized market without central physical position where market participants trade between each other through various means of communication. Nowadays, it is mostly online through different trading platforms. In OTC markets, traders act as market makers by stating the price at which they buy and sell securities, currencies, or other financial products. Because trades are made between two participants in the OTC market without others being aware of the price at which the transaction was completed, we cannot see the true volume or the depth of the market. This is why a lot of traders consider the OTC market less transparent than stock or futures exchanges. OTC markets have also way fewer regulation and are primarily used to trade bonds, currencies, and other derivatives and structured products. The currency market is the largest and most liquid financial market in the world. Trading is held 24 hours, 5 days a week through three main sessions: Asian, European, and North American. Forex and online trading in general became extremely popular in the recent years thanks to the internet access boom and thanks to the OTC nature of Forex. It is very easy to open brokerage account with a minimum deposit starting at $50 with many brokerage firms. Should you open an account with 50 or 100 bucks? Well, not really. But that's a topic for another video. The average daily trading volume on the Forex market is around $6.6 trillion, which is 10 to 15 times bigger than the daily volume on the world stock market. As we already mentioned, the currency market is decentralized. There is no specific trading floor such as at NYSE for trading stocks. Because of the OTC, the Forex market works on the basis of connection between dealers and traders. In recent years, Forex brokers also started adding more products to their list to attract more customers. That's why you can trade CFDs, which are derivatives of major equity indices such as S&P 500, Nasdaq, DAX, FTSE, or commodities such as gold, silver, or crude oil. As we are coming to the end, let's have a quick recap and summarize what we talked about today. Centralized exchange is highly standardized in terms of size of trade contracts, trading hours, and uniform price for all participant sides. The market is heavily regulated and completely transparent. Because of that, every transaction is publicly available for anyone to see. Trading futures and stocks on open centralized markets is very popular, but both are heavily capital demanding markets as well. For example, if you want to day trade stocks, you need to deposit at least $25,000 due to the regulations. The same goes for the futures market, where, for example, for trading DAX, you need at least 20,000 euros as a margin to open one contract with 25 euros value of 1 point. Because DAX can move hundreds of points in a day, you can imagine how capital demanding this can be. Decentralized markets, on the other hand, are very broker dependent. Since they are not so heavily regulated, brokers can set up different trading conditions for their clients. Because of that, you can experience different contract sizes, trading hours, and different prices for the same instruments. Although this sounds scary, in fact, since OTC brokers are still regulated by regulators such as ASIC, SISEC, or FCA, and there's a huge competition amongst the brokers, it's in their best interest to provide the best trading condition for their clients. Alright traders, this is going to be it for this episode. I hope that you have enjoyed this video and I'm really looking forward to seeing you next time. If you have any questions or have not understood something, just leave your comment down below. Thank you for your attention and see you next time.